So unemployment claims came in right in line, and so market's not really moving. I'm watching this, and I'll look at the charts in a minute. I still think we roll over here, but we'll see. So also tomorrow we have on the red folders here. These are red folders are ones that can possibly move the markets. So we have the JOLTS job openings, and if that comes in, lower, we're coming into the weekly cycle low, the daily cycle low. So I'm looking for some kind of a catalyst to kind of spook the markets and send things lower. It could be wrong, but let's go ahead and have a look so far here today. Just kind of moving between on the 4-hour Bitcoin chart between the buy zone and the sell zone. So I agree with Mike. We probably crab walk here for a bit. Looking at the IBIT here, and this is a study that we have been touching on from time to time. We have unfilled gaps above and one down below. And so this actually should be green. Generally, the unfilled gaps I have is green, so I'll take that out. And interestingly, by the way, I did a video on this put it on TradingView, and it was chosen as editor's pick. And look at this, you guys. I'll brag a little bit. I have 2 editor's picks from this week. So anyway, if you want to keep up on some things as we go along, this is over at TradingView. You can just Google Brett Fogel TradingView and did a study on that. And then also one over here called the Bitcoin 3-day Death Cross. So periodic studies. The cool things about these are that you can hit the play button and it'll kind of say were you right or not. You can't fudge these things. So if you click on these, you can always go back and talk about it later. So if you hit that play button, it'll kind of advance as it goes along a little bit further. So anyway, you can go check those out. On the IBIT, though, specifically, it's like the CME, where the gaps generally are magnets to price to refill these gaps. What the gaps mean is it's when the market was closed, either after 4 p.m. or over the weekend, because Bitcoin, everything else is open 24/7, and as of now, the stock markets are not. They're trying to change that, but these fair value gaps are when the markets are closed and prices sort of gap down. Whereas, like the banks can carry unrealized losses for a time and not have to claim it. Same thing kind of with the CME and these Wall Street products. They can kind of hold it there, not as a loss, and then later bring the price up to that, fill that range, and then zero it out. The house always wins, you guys. So, and I want to turn off the put indicator here. That's part of our crypto option spread trading class we just finished. Really interesting class there. And we'll be opening that up again probably next month. But bottom line on the IBIT, I do think we come down to this range and fill this gap. There's also an unfilled gap from all the way back here and down in this range lower, which on a 4-hour time frame is easier to see. But we did just fill this gap from back in November of 2024, I believe. So yeah, that's true. So the next gap, if we go all the way down here, see this magnet all the way back here, this would coincide to Bitcoin at about 50,000, which is what I've been saying for weeks, if not months. And so if we go to a 4-hour here, we can see that gap. That's why I'm watching the 4-hour. I know this is probably way more detail than you guys want to look at, but point is, these unfilled gaps, they tend to still fill, and you can see it just barely there. There's a little gap up like that. So down in this range, I don't know. We'll see. It doesn't mean it has to happen, but we can see that this one filled and that the likelihood it would come down here, because if we came down here, that would be 23% down to this level at 30 on the IBIT. And the IBIT's leading Bitcoin quite a bit, along with Michael Saylor. But, the ETF flows, we'll look at those as well. So if we had a 23% drop, that would be the same as Bitcoin down to 50,000, down in this range, where we can see those buyers lining up already. Okay, so we'll keep an eye on that. There's a number of factors kind of leading me to believe that we go down to those levels. And so looking at the chart here of that and getting away from all the spaghetti here just for a minute, we can see that, this squiggle I've had on this chart for a while. I had it over here. We sometimes have to draw it and move it over to the right a little bit. But we can see a big, thick sell block right here. Lots of sellers on Bitcoin. That 70K region is so important. That other analyst was saying 78K. I don't see any reason why that's such an important level. Well, okay, here. So it's kind of... It's an important level, but really, for me, we have to get above 74K. That's where all the sellers are. And then from there, we can zigzag up a bit. So call it 74K. 74K is more important because it was that low back in this range, that pivot low. So I think that person's wrong. But anyway, it's not about being right or wrong. It's about being on the right side of the trade. For me, I'm short. Now that there are these Coinbase options and futures, then we can actually trade that now with some margin. And it's good that they don't give 10, 20, 50 x margin. It's only up to 10x. And I don't recommend you use that much. I'm on using 4x margin right now for some short. I am short on the the IBIT options. Or futures rather, perpetual futures. There's all these derivatives, you guys. You have options, you have regular futures. Both of those have expiration dates. Perpetual futures are the ones where there's no expiration dates necessarily, and you pay a funding fee, and that's how the offshore futures companies get away with it. But to be compliant in the US, Coinbase sort of created their own version. So basically, it does have the perpetual futures on Coinbase. They call it, perpetual like, and essentially it's a 5-year expiration date. So that's how they kind of squeeze it in, and then somewhere in that range they will. Anyway, don't worry about it. Point is, we can do that now. I am playing the short side. I reserve the right to be wrong. I don't recommend everybody do it. But for me, this is rolling over. We have the big sell block here on Bitcoin, also on the total market cap, which we'll look at in a minute. And we're putting in lower highs here. So this is not a bullish scenario. It's kind of a symmetrical wedge. I think there's probably some other curveball and scare in this Middle East conflict. They're now suggesting that Iran's going to fly drones over into California. And I guarantee any drone hits and explodes and causes a fire in California, markets are going to tank. Everyone's going to hit that sell button. The algos are going to just ask questions. What is it? Shoot first, ask questions later. That's what the markets will do. So I'm playing the short side. If we break above here and get above the 50-day EMA, that's this green line, and see there's a lot of sell pressure up above. We have the 50-day EMA. We have this big sell block in here. We have this resistance line at 70K. And so really, unless we get above and close above 74K, I'm going to hold on to this, right or wrong. And, so we'll see what happens. And any spark, any miscommunication or any fear will cause this thing to dump. And if we break down below the 66K level, this blue fractal, I do believe ultimately plays out. And ideally, we do come down to that 50K range to 52K range where I would be buying Bitcoin. Even if the bear market drags out into September, from a time perspective, I think that's likely. And even if we go down to 45K, 46K, still buying at Bitcoin at the 50K level, long term, can't go wrong, right? Especially if it goes to $1 million, as Mike was just saying. And I'm glad he covered the stretch instrument, because I was talking about that in M3 yesterday and earlier this week. So he has discovered the infinite money glitch, apparently. And so as they get more investors into Stretch and create more money, then they can go buy Bitcoin, which makes the value go up, and it makes the value of their existing holdings go up, so they can borrow more money to buy more Bitcoin. And so it's an ingenious way to do that. I just hope ultimately it's not a house of cards. But Look, Saylor's one of the smartest people in the world, and so I would bet on him, not against him. So anyway, point is, long run, 50K Bitcoin, anywhere in this range. You might even want to put in your buy limit orders. Down here, I'd say 50, all through here, 54K, 53K, 52K, 50K, 49K. Just load up your buyer limit orders there. And so I'm supposed to say it's not financial advice, but we're under the educational exclusion, one to many. I can say, guys, I buy Bitcoin at 50,000. If you reach out to me one-on-one and say, well, I can't give individual financial advice, that's the differentiator. So anyway, for legal reasons, not financial advice. All right, but you get the picture. Otherwise, our signals here not showing a lot of direction on the daily charts. On the weekly, we are seeing oversold all throughout here, but I'm not ready to get in. I really want to wait till the weekly indicators start to roll back over and go green. We have an RSI that is extremely oversold and turning green, though. And the last time we saw that was back in June of 2022. Well before we had that bear at the bottom, and then here we had bullish divergence right there, early clue in November of 2022, because we also know that we had that clear as day buy signal in January of 2023, that monthly early reversal indicator. Make sure you have these, you guys. The ERI, the Pro Suite The RSI Pro here, bullish divergence is plural. All throughout here, I've been very bullish. But when these start to align, the earliest, we call it the ERI, but this is the RSI, our version of the relative strength indicator. And so I've nicknamed it the early reversal indicator because in hindsight, which is great in hindsight. I'm always looking at what is our future hindsight going to say? So bullish divergence in November of 22. I'm just recreating the timeline, and then in December of 2022, we relaunched M3 Active Trader, and I was saying the time to buy is when there's blood in the streets. Was that a good time to buy Bitcoin? I'm not trying to be right in the past. I'm using this as clues for the future. And so let me turn off these other ones so you guys can see what I'm talking about here, so there's no confusion. And here we have it. So basically, back here at the exact bottom, bullish divergence on our RSI Pro. This is a new indicator. It's a pivot point indicator. So you don't need to know these. I'm watching enough things, but not too much where it's confusing. Everything's aligned. And that RSI Pro is so good, you guys. And so if nothing else, even if you can't spell RSI, like most of us, including me, I used to own a software company, barely spell PHP. Don't need to. So if you see these bullish divergences, was that a good time to buy? That was right at that $16,000 bottom that I had forecast here back in May. So we nailed that. The next RSI bullish divergence, where? Right here, the next big push up in September of 2023, along with an ERI in our buy zone. Guys, our signals are very good, and we are watching for them to align for the next leg up. Point being, and next thing again, ERI bullish divergence there, ERI huge push up there. So we are waiting, waiting for the next bullish divergence and these to turn green, and then we're going to be ready to really get in. But I don't think we're there yet. Okay, everybody on board with that? I know this is not active traders, so I don't want to get too far into the weeds with the signals, but at any rate, did want to point that out. All right, let's go over to total market cap just to show what that looks like too, because that also incorporates all of these, the buy and sell blocks. That's what I used to call the top, essentially back in here. Huge sell block over here on the daily for total market cap. And it kind of disappeared, but at any rate, we are here now. I do think this is still a bear flag, and that, I've had this zigzag on here for a while. I did extend it, but down, bear flag, and then drop. The measured move on this is right down into this 1.8 trillion, where the buyers are. That would coincide with, you guessed it, 50K Bitcoin. Now, the only thing is that more and more people are starting to say, hey, 50K Bitcoin, and I don't like that because confluence is dangerous, and that's where the powers that be, the whales and everybody else, will try to maneuver price a little bit. So anyway, but still, as of now, this is what I see, and we have this big sell block right up here. I think price rolls over. We also have, let me just jump back. This is important on the Bitcoin chart as well. The camel indicator here, our cycles indicator that we use, that is very good at showing where the cycles are due to happen. Many people believe the cycles are in control. Everything else is narrative. So whether you believe that or not, I am looking for a confluence. Back here, we had a weekly cycle low, a daily cycle low, and a pivot point. So we saw that push higher. This would indicate that we drop again into the next week. And somewhere between March 18th and March 28th, somewhere in there, should see another daily cycle low. Does that mean we go down to this 52K range? We don't know, but I do think it's lower. And it might even hold here at 60K. I'm open to that. Many people said that 60K would be the bottom, or was the bottom, and it might be, but I would certainly think it retests again. So I'll likely cover my shorts at 60K. It's showing tentatively as a pivot point bottom. And, from there, we'll have to reevaluate. But from here, I wouldn't be loading up on the long side just yet. Okay, so we've learned to trust those buy and sell blocks. Coming down through those, we can also look at total 2. Total 2 also in a thick red zone. I will turn off the cycle indicator just for a minute. But these order blocks, especially when they're double red like that, this is everything excluding Bitcoin, so basically showing the altcoins. A lot of sell pressure on alts, and that would include ETH and Solana, so I do believe they also drop. We don't want to be buying anything in these red zones, and that's not something you're in here anybody else. No one else is talking about it. But we have learned to really trust those levels over the last couple of years using them. And so you can see that all the way in total market cap, 2 and 3, etc. So anyway, it's not time to be buying. And also looking at the VIX here was a little bit concerning because this thing is spiked up. This is sort of showing maybe we hit the high on the VIX. That was back on Monday, I believe. That was on Monday when we weren't sure what was going to happen over there in Iran with Straits of Hormuz and everything else. But look, guys, these guys they're desperate. They're still launching missiles all over the Middle East and at Israel and potentially drones at California. This is not over yet. And, I don't want to speculate, but if there is any fear or surprise of, there's still this unaccounted for nuclear material over there we're apparently going in to go get. I don't want to get into the politics of all this, but if even the slightest rumor that there's a dirty bomb somewhere, the VIX is going to spike possibly up to 60. Last time we saw that was back in April of 25, and that was sort of the bottoming of the markets. But at any rate, this trend clearly to the upside, and as volatility increases, that's when we see generally prices go down. So everything's kind of pointing toward that. We'll look at some time frames as well and some other studies. In the meantime, let's go down and just kind of look at some of these here. That's Bitcoin there on this is the futures. The options, the perpetual futures that I'm trading. I don't want to get into that in this class. But Solana here, same thing. We have cell block right above and this blue fractal, which don't always play out, but I've had that on there for a while, and it has been following almost exactly on Sol. And the concerning thing is there's no buyers down here on Solana, at least on the daily time frame. On the weekly time frame, same thing. We'd want to see Solana down around that $50 range. I love Solana. I had it in my IRA. I kept adding to it, but I sold it because big sell block. I'm just not going to be long in these sell blocks. We want to buy in green and sell in red. It's pretty easy. Almost too easy. So, but anyway, here, same thing on Ethereum, big sell block above. So don't let this little bullish bounce fool you guys. The sellers are here. And, my joke about my favorite Italian restaurant down on the end of the block. They have t-shirts that says the Italians are here. And that's kind of saying, hey, we got this. But if you see sellers are here and buyers are here, where do you want to be long? Where do you not want to be long? All right, pretty easy to judge. And if you're watching this on a replay somewhere, you can find out more about our signals over at cryptomastery.org. We sometimes cut up these classes and do snippets, so check those out, cryptomastery.org. All right, and then on some of the privacy coins, I do like... since this is our Retire Rich class, I like the long term on the privacy coins still on some of them. I like Monero. Look at this long term chart on Monero. We can zoom out on a weekly time frame. And I do think that this is one to own longer term. It's in a nice uptrending channel and long term buyer support. And let's see, how far back does that go? It goes back quite a ways, you guys. And this is look at this macro setup though. Pushed up and it's hit resistance, major resistance 3 times. It broke the 3rd time. We always say usually the 3rd or the 5th attempt will go. So maybe it runs again and it fails. But the 5th attempt, I think Monero could easily double here. It's one of the leading privacy coins. And let me clean that up a little bit with all of our arrows. But you can see this chart pattern as many people think incorrectly that the more times that a resistance or support level holds, the stronger it is. It's not true. It's weakening every time. So the 3rd attempt, this has been a strong sell point. Again, the 4th attempt probably will fail and zigzag around in here, but that 5th attempt, and it might even take till around September where I think everything turns anyway. But if we see this kind of a move, in the price discovery, keep an eye on Monero. These leaders will run, and then we'll see money. We'll see profit taking on those and go into those other privacy coins. Those of you that have the privacy coin profits, that is, it's just delayed. The market's really kind of hit a stall point. And Zcash went up 10x, and it's pulled back, a lot of profit taking. But we should see Zcash kind of hold these levels. Prior resistance turned as support. And probably on a Fibonacci that's hitting into a support level. But, I would wait a little bit on that. Volumes dropped off dramatically, but certainly oversold. Zcash on a weekly basis getting bullish divergence here. So we want to be waiting and watching for these and the TSI to go green. I would actually start accumulating Zcash. The Brexit indicator also oversold down here. And so again, retire rich. This is long-term Monero and Zcash are great. Top two privacy coins right there. I did put a buy alert out on Hyperliquid in M3 yesterday. Look at this beautiful chart here on a weekly time frame. This says it all. It made up nice uptrending channel, parallel channel on the Fibonacci targets. We could see this go up to 100. And I just shared an article that Arthur Hayes put out yesterday or the day before. He thinks Hyperliquid goes to 150. And I'll tell you why. But either way, big bullish engulfing candle here. We had another one the week prior, and then the over here in January. This is going higher, coming out of a buy zone. Hyperliquid definitely going to go up. Here's why: because they are a decentralized exchange. And the Arthur Hayes contention, and I agree, is that these DEXs are going to take a lot of the trading volume away from your centralized exchanges like Coinbase, like Binance, like all of these that even overseas. And for a variety of reasons. One of the biggest ones, though, is with Hyperliquid. They are pushing back. They are taking 90% of their profits. And one of my thesis and requirements for a good long-term hold is a borrowing off of one of Mike's core tenets of utility. But I added in, is this a real business? Can it generate profits and have customers? Because here's an old adage, an old joke in business. I hear that customers are good for business. So Hyperliquid, it's earning money on all of the exchange-traded trades. When you buy on Hyperliquid or on any exchange, there's a commission generated to the exchange, whether it's Coinbase, Binance, etc. With Hyperliquid, since it's decentralized, they're taking 90% of those funds, those commissions and profits between the bid-ask spread and also the commission fees, and they're buying their own token. So that is going to support the price skyrocketing here from 38 to, he's saying 150. I'd say maybe 120, but you can see the fib targets here at $75. That's a nice double. And then the 2.618 goes to 100, so that's, call it a triple. And then you could do a 4x here from 37 to 122. And almost a 4x, that would be 160, but you get the idea. That's a great looking chart, you guys. It actually, I need to redo it. The fibs would go from here to there, so something's off. Okay, well, that's where he got his $150 target. Arthur Hayes, smart guy. And yeah, so basically from the swing high to the swing low down here, we have, I think it certainly will go to 47 from here. That's nearly a double. Big bullish engulfing candle. Targets here, 82, 119, 156. So you guys keep an eye on that. I did just buy a bunch of Hyperliquid over on MEXC with a little bit of margin. So I'm net long. Only issue there, currently in a sell block. So probably see a pullback on Hyperliquid. I would buy Hyperliquid anywhere below $37. Anywhere in here, if it pulls back to 32, 31, that's the sweet spot. Guys, this reminds me of Solana back in August of 2021, where in our August 1st newsletter, I said to buy Solana. It was exactly trading at 37. I said, wait for a pullback to 35 and buy. And we nailed that, and then it went up 657%. So I'm as excited about Hyperliquid as Solana back in the day. This is the buy zone, so I know I'm going to say this a few times because I know some of you guys are doing other things and don't fully pay attention, and repetition is the mother of all learning. Hyperliquid strong buy in that range. And anyway, so, and worst case scenario, if things pull down and Bitcoin drops, look at all the buy support right in there. So, and then a macro uptrending channel. So Hyperliquid, kind of my top altcoin right now. Sui, it's kind of trying to find a bottom long term and has this uptrending channel as well. But typically you will get 3 bounces, and that's usually that failure time. So there's a big sell block here. I think Sui is too dangerous at this point. It's worth keeping an eye on. It's oversold, but I'm watching it. Again, things in green are ones I own. Blue are ones I'm watching. Ones in red are also... those are the ones I'm short. So Dashcoin, another privacy coin. Not, it's kind of, here's the thing with Dashcoin. It has this similar breakout pattern where it broke out and retested. So I am watching for it to go higher. A lot of sell pressure up here on the weekly, so these are not ready yet. If you want to be a bottom fisher, I don't recommend that. Coins like Near are hitting a multi-year bottoms, a double bottom there, but we haven't had much success with those in this bear market. And again, there's three kind of mindsets in the markets. There's a time to be aggressive. That's where we're in the bullish market and we're in that push to new all-time highs. Then there's conservative. That's when we've probably put in the top and we're catching the bear market rallies. And then there's protective, when we really just don't want to be trading in protective capital. So right now, I think in this case, for most of these, we should be in protective mode. We may look back, likely would look back later and look at near though, and say I should have bought it at $1. And there's a lot of argument for that in many of these coins. Because look, if you want to hold multiple years, near is a great protocol. And in the last cycle, it went up to $8, $9. So if you want like a good 8 or 9x on this, maybe add some near to your portfolio. And I'm not going to put an official buyout on it, although this looks pretty good. And you would put a stop loss here right about 92 cents, maybe below here like 80 cents. So that if it were to break the multi-year low, the risk reward is certainly to the upside. And they have these great tools in TradingView where you can approximate those. You just go like that. If you're in log mode, it'll bejigger that a bit. So I'll just go in here and say stop loss down here about 80 cents, right? So you can play around with this, and if your target is up here, a lot of sell pressure up in that range. You want to look for 3-to-1 risk reward ratio. So this still qualifies. If we drag it down though into even a more near term target, it's kind of borderline. Near really would be a longer term trade, and you'd want to like ride it out. But hey, look, if you bought $1,000 of this and every $1,000 turned to $10,000, that's pretty good. That's why it is on my radar. I do understand most people don't have as much capital as they did 6 months ago or a year, and that is always the challenge. All these bargains come up, but that's also why we have to be ruthless about taking losses higher to preserve capital so that we can buy it back lower in dollar cost average. All right, so Hedera, I do like Hedera a lot. This is another long-term buy. They are getting a lot of contracts with governments, Australia, UK, and it's just not quite there yet. But look at the upside on Hedera. I think this is probably, I don't know what I was doing there. I'm gonna let's see. That's because I need to put it back in log mode. Yeah, on longer-term time frames, multiple years, I prefer log mode. It does change a bit if you're in regular mode, for those of you that aren't doing that. But at any rate, on so basically it's in a downtrending parallel channel, a breakout above this and coming up to this range, and this parallel channel. This does have sort of a 7 or 8x. And I think Hedera is one to hold long term. Probably a good time to be accumulating, not go all in, but at 10 cents. This is HBAR is a great platform. And they are doing things by the book, by the way, so that these governments and other countries can and should use them. I think Lloyd's of London is starting to use them. They are rewriting the rails of finance. And Solana was saying that as well. So it depends. Do your own research on Hedera. I'll do and pass along some more. But these are all my top coins to start dabbling in. Near, Hedera, Dash, Hype, Zcash, XMR. The rest of these I'm just keeping an eye on. The privacy coins, watching, but everything else, all coins for the most part are not in good shape, including Horizon. So breaking multi-year lows, unfortunately. So we'll wait for that to come back up at some point later in the cycle. I still think Horizon is a good project, but altcoins, everything purely speculative. Why? No profits, no customers. You don't fall in love with the narratives on these things. And these, it will remains to be seen kind of what the next high flyers will be. And some of these from last cycle, like Algorand, just really have never recovered. Curve Finance and Stacks and all of these. So the question is, though, will we look back in 2, 3, 4 years saying, wow, we should have been buying these? So I keep looking at them, but I can't. The charts don't look. I like to buy into strength and not try to ride things down lower. And because that can be years where it comes back. So anyway, just kind of taking a look at these. I do love these patterns, by the way, and I have them on my radar. If and when they start breaking back above these long-term downtrends, we'd love to catch those. And clearly, that wasn't the right one. Problem is all these levels of sellers up above. And so anyway, that's the challenge. If they weren't there, I'd say, what we're looking for specifically, though, is a break above and a retest. And we want to try to enter there because generally then we see this. Okay, for those of you that are patient. But Anyway, gaming is not really ready yet, and so some of the old favorites from last year just destroyed. Pendle, big disappointment. We caught these nice moves all the way back in July. We caught this move in Pendle here, and then again in August. So this was a 70% move, and we did catch that in M3. Right in there was right 70 cent, right? But then it just rolled over, and it's not quite there yet. So what do we want to do though? The proof that it can run hard with backing and liquidity. So I'm watching for this breakout retest and to resume. Where is this price? Call it $1.50. So I'm setting all of these alerts so that you guys don't have to. But by going through this over and over again, you're kind of learning about my mindset on what to look for. So longer term, when Mike and I are maybe have ridden off in the pastures, brighter, greener pastures, you guys will know exactly how to read these things. Chain looks interesting, but there's a big sell block in here. So no point in going through all of these coins. I don't see anything really rallying. The strongest thing out there right now is Hyperliquid. And the rest of this, it's just too dangerous because as the markets come down, everything will come down. By the way, let's see. Okay, Mike had to take off. Okay, so let's take a look at some other charts here. And this is another chart here basically showing that. So this is my study on the past bear markets. The time between breakout to all-time high to next all-time high, that's in purple. So that would suggest that the next breakout to new all-time high won't be until June of 2028. Now this, I think, is probably not going to play out exactly the same. More importantly, though, are these red boxes, and I'll get to that in a minute. The green boxes are how many bars between all-time high and the next all-time high. So, and the difference between that is the purple is breaking the prior all-time high. Okay, so the green is all-time high to new all-time high. So that was 49 bars from 2013 to 2017. That was 49 months, and then it was 47 months. And then, so I wasn't sure. Remember, I was saying we'll either go to October, which will be 47 months, or we might go to December, which would be the 49 months. And it turned out October was the top, 47 months. So it seems these cycles are kind of shortening a little bit. So in the red boxes, it's 13 or 14 months from the high and the rollover. And this one arguably could be 13 months as well. And anyway, regardless, 14 months, 13 months from high to bear market low when it touched on that blue line. The blue line is the SMA, the 50-month SMA. So that blue line has held quite nicely through here. That was a study I did on TradingView if you guys, you can go look at. But right back here in this cycle, the 50-month simple moving average, we can see that up here if I hide it. I've got the exponential moving average. That kind of helps there, but it's really the SMA where that overlaps. I like to have both of them on there. I'll turn off the EMA for now. So the SMA, this was the bottom back in here. After 13, 14 months, came down, touched that, rode it up, and then it pushed higher. Same thing in this cycle. This was the COVID crash. Doesn't really count. For the most part, that held. And then coming back in here. Now, we were holding the 50-month SMA through there. Mostly. What happened? FTX took it down, so that was a bit of an anomaly. So we're right along here. I think we probably crab walk along that probably at least till April, May, and start pushing up higher. But it could bottom and go as long as sort of, I don't know. This says November. I don't necessarily think that's the case. We could also make the argument that maybe. So hang on a second. That the top, we could make the argument that the top was in 45 bars. In which case, if we do this and put it back to 13 months, then we can start pushing higher in September. I thought that's how I had it, and that would be somehow that got bejiggered. So September is here. I'm just going to modify that, you guys. And the Bitcoin target for the high October of 25, arguably it was in August, and because it was that same range, it was almost the same. I don't think it necessarily went higher. If we did, it was just a little bit. Yeah, it was it was right around that area. I'm not going to mess with it right now, you guys. I don't want to mess this up. But, this is not an exact science. We're looking for approximate windows, so I'll leave that overlap there. Okay. Anyway, moving right along. And also, though, just so you know, this is that study, and I'll show you the new one. But this study here is the one I just talked about. That's a 3-day death cross. No, this is the study that I just put up. This one here, simple moving average points to 50K Bitcoin bottom. And that's, let me do the live one. You can go watch this on TradingView. But the live version of it is here. So basically, I just did this study similarly. So on this one, we have the 50, the 100, the 200, and 300 SMAs. I know you guys probably don't want to get into all this, but the confluence here, right, of that $50,000 buy block that I already showed you, and the 300-week SMA on a weekly time frame. And this gets a little confusing. We were looking at monthly before, but this is another study kind of showing that same kind of thing, because the 200-week, 4 weeks in a month, right? That would be that 50-month EMA that I just showed you. So that's why. So here, COVID crash overflowed, held mostly through here. FTX dropped below. Where did it drop to? It dropped down to the 300 week and then rallied. So if we come down into 52K, this is why I don't think we go. It's important, you guys. I don't think we go down to these 30,000s that people are panicking about. The 300 week puts us right in that 52K, 52,000 range. Maybe it wicks down to 50K, and then right above it is that 200-week SMA, and that would be around 56 to 60K. So right in that region, you guys, I think we're close to a bottom. If you don't want to mess around with all this, you want to just start buying Bitcoin, go for it. But I think it probably comes down to 50, and that would be the better place to buy. USDT, we've covered this in the past. All I want to say here is we got into bear market territory briefly, about 9%, pulled back down again, but it's setting up for another push higher, and this is inverse to prices. So as stablecoin dominance goes up, money flow goes into Tether. It's coming out of Bitcoin and Tether, out of Bitcoin and total market cap. So, and then that would indicate the next sort of 5-6 months, deeper bear market territory, and then we start to recover. This comes down again, as we saw back in here, slowly as the money goes back into the markets. Okay, so that's a contrary indicator. All right, you guys, that's about all I wanted to cover on that. On the monthly time frames, this is longer term. A couple things here. We covered this yesterday a little bit, but on the this is the money flow. Sorry, RSI, the standard RSI on a monthly time frame, coming down into this really low area. RSI is oversold. Traditionally, this is where things start to bounce, but when we go to a weekly, we can see that okay, the weekly has updated. So we're in this area where this certainly could continue. On the 2-week also, this is an area where the RSI typically bounces. So it should be interesting. It also points toward, next week being a cycle low and then start pushing up higher out of this. So I would, next week should be interesting. And, but I don't know that I'll be able to join next week. I'll be headed down to off in a cruise here. So anyway, looking at money flow index, also down in here, money flow in this zone on a 2-week time frame. This is where money flow usually recovers, but not always immediately. So in June 18, and it wasn't until January full year where that really kind of to break up back above. So that line in the sand is at 36.5 range on this money flow index. So we'll be watching that. More and more of a waiting game. I know it's getting old, but this is all we can do. Here on the 2-week here, let's just go to a monthly stochastics, MACD. And this is another reason I don't think we're out of the woods. If we zoom out here, you can see prior cycles, we usually have 10 or 12 months of this negative MACD. And before it really recovers, the last cycle here, same thing, came down. It was quite a bit longer, like 14 months. After that crossover, this was where I called the top of the market to get, and was pounding the table to get into cash. Up here is where I started saying get into cash, mostly based on this MACD. Similarly, this last cycle, you guys know, is right around here. We were saying it's time to sort of be careful, and this is when it was time to get out. in November of 2025. So we're only 5 months in, you guys, on this, and so we've got more pain to come. It's now not out of the woods. So that's on that monthly time frame. Let's see a couple other things. I think that covers that. We covered that and that study there as well. This is that IBIT study, and so that's all I wanted to cover on that. If you guys are in mentoring or interested in maybe joining mentoring, we have some member spots opened up here, and I'll drop that link for you. We've got some specials in here for this time because I know the markets have been brutal. I've never done this. I'm discounting my coaching mentoring program by 50% for the next 6 months. And normally that's 5,000, which includes all these services. And I've cut it in half, mostly because we did a math error on the payment plan, which came out to 3,000. So anyway, pay in full, 2,500. It will go back to 5,000. It includes one-on-ones with me twice a month, and you have private chat with me anytime you have to ask questions. Model portfolio updates. Those of you that have been in know what those are, and you get an email whenever I update the model portfolio. Private signal chat in the private group, private member website. You get M3, you get Retire Rich included, you get the Pro Suite signals, Moonstream Academy, other beta and bonuses like our options spread scalper. I'm going to be including some of that going forward, and bear market strategies. So you can do that here at the link in the chat, you guys, and then you can pay monthly. $497 includes most of the same services except for Retire Rich. Oh, it does have Retire Rich, or there's a light version. My old mentor taught me there's a price for every person and a person for every price. So there are other options. You can pay with crypto. And look, guys, I always suggest do a year. I've had clients do 6 months of mentoring, and we think we can nail that window, but generally that window gets dragged out, and you need a year to be right. And so the next 6 months, we're going to catch the bottom, and we're going to hit this next phase of the bull run, which I think is going to be massive. There's also financing, by the way, you guys. I fully understand money does not grow on trees, and if you could get your payments down to like $228 a month over 12 months with no interest, is that potentially of interest there? So these options are here for you guys, or you can even do it this way for $39 down. This is through a company called Denefits, and just pay $39, little bit of interest, hardly anything, almost free, right? So then down below there's also a la carte. So going forward, you've got Inner Circle $97 a month, M3 $249 a month. Some of you guys are in bundled services already, but if you add up all the cart, it's way cheaper to do it bundled. So anyway, that is over at moonstreamfinance.com/mentoring-renewal. Since you guys are in Retire Rich, hey, look, guys, I love what I do, and this is fun, and we do it for free if we were independently bazillionaires, but we're not. Mike, I can't speak for, but we have a team, and we have expenses, and we got to keep the lights on. So there you go. There you have it. So please support us there, and again, you get one-on-one access to me in these two, the 6 month pay in full or the month to month. And so anyway, and then mentoring light, just signal chat with me. So pick your path, but I would highly recommend not go hide under a rock and not try to go it alone. These are tricky markets. We are going to catch a bottom here soon, and once we do, and once we have that signal, that monthly ERI, once that prints like it did in January of 2023, that's when we go all in. That's when we go back into aggressive mode. And right now we're in preservation of capital mode, catching base hits, hyper liquid, a couple of those other ones, not going fully in, mostly in cash. So check that out, you guys. I think that's about all I wanted to share. There's articles. I was going to research that a bit. But yeah, that's everything I wanted to share with you guys. Any questions on any of that? And some of you have been in coaching, by the way. Now would be a good time to renew. Buy when there's blood in the streets. I think probably we'll see that as soon as next week, but have to see what the signals are telling us. All right, so let's see. Still a few of you guys here. I don't know if there's anything else we need to cover, so I'm going to go ahead and wrap things up. And again, that link is moonstreamfinance.com mentoring-renewal. And the other thing is, if you aren't already in the next level DeFi program, that's a great way to just set it and forget it, that we promoted last week. And Vadim is doing a great job just setting. He sets it up for you guys. So we're not here to sell you things that you don't need. We're here to give you the tools to succeed. Hey, that actually rhymes. But anyway, okay. That's all I have for you. Thanks, Dr. T. We will see you guys next week. Probably I'll be here next week. I'm not sure. I might be in flight. But thanks, everybody. We will have some bullish turns and better news and more clarity soon enough. All right. Take care, everyone. Bye.